What happens if you want a reverse mortgage, but you still have a mortgage? That's what we're going to talk about. You've spent decades paying off your mortgage, you've watched your balance fall, your home value rise, and you've finally reached that point where you can breathe. But then rates jump. Your renewal offer comes from the bank and suddenly your payment doubles. This is what happened to a lot of people within the last couple of years. And so you say to yourself, well, there's got to be another option. Can I get a reverse mortgage even though I still owe money on this mortgage? That's the question we hear all the time. Today we're going to answer it clearly. Hi, I'm Peter Fabry, founder of Rewind Mortgage, an information division of my licensed brokerage, and I've been brokering for over 25 years, helping Canadians from first-time buyers to retirees find real solutions in today's economy, including the 1 in 3 people who cannot find a mortgage at their bank. If you'd like to check out my licensing info or learn more about my background, everything's linked in the description below. So let's unpack how reverse mortgages work when you already have a mortgage. Because yes, it's possible, but it has to be done all at once, and you need help understanding and coordinating this. So here's the short answer. Yes, you can get a reverse mortgage, even if you have a regular mortgage, but the reverse mortgage must first be paid off. Your existing balance has to be paid off, and only what's left over after that goes to you. Think of it as replacing your traditional mortgage with one that doesn't require payments unless you want to make payments. That's the key difference. You remove the monthly pressure while staying in your home. So here's how it works in more detail, step by step. The exact process. Step number 1, you do an application, do it together, and the lender will request an appraisal of the property, confirm the value, and see how much they can lend you. And here's the real key point that you need to understand and why it's good to work with a broker like myself. Some lenders will pay for this appraisal upfront and you don't have to pay it back. Other lenders will pay for it upfront and no one needs to come to your home or in your house because they're able to tell the value online using their computer-based or other sales data of houses in your area. And you only pay for it on closing day, and it's a nominal cost because it's discounted because the lenders get a group rate from the appraisers. Now, in other situations, a third scenario, a lender will require you to pay for the appraisal upfront, and this is usually for rural properties or unique properties or very high value properties where they can't really tell the value easily online. Think of it like this. What if your house isn't visible on Google Maps? That's a classic example where they're going to want an appraisal because they can't even look at it online to see what your house looks like. So those are the 3 kinds of scenarios where the appraisal will be coordinated to determine the value of your home. And from there, they can tell how much they're going to lend you. So step number 2, based on your age, the location, property value, which has been determined by the appraisal, they'll calculate how much they can lend. Then your mortgage payoff needs to be calculated. And this can include any penalties that might be applicable to get out of your mortgage. Some mortgages have no penalties. They're open, like think a HELOC, a home equity line of credit. And other mortgages, especially those ones that were deeply discounted with the lowest rates, sometimes they have the highest penalties. Your lawyer is going to request what's called a discharge statement, which will calculate everything. So if the reverse mortgage amount is higher than your existing mortgage balance, the lender will pay off your bank and give you the difference. And you can either have that as a lump sum or as a monthly allowance or a little of both, tax-free. So now you're mortgage-free in a sense because you've got no monthly mortgage payments required. So here's a real-world example. Let me show you how this looks like in real life. Ray and Elaine from Caledon were 67 and 64. They owed $190,000 on their mortgage, paying $1,500 a month, and their home was worth $800,000. They qualified for 38% of the value of their home, about $304,000. We used $190 to clear their mortgage, and that left $114,000 for renovations, an emergency fund, etc. The result? The payments dropped to 0. They stayed in their home, and they freed up over $18,000 a year in cash flow. They said they finally feel like they can breathe again, and that's so common. It's really one of the most common things people say after it's all done and dusted. So, section 4. What qualifies you? To qualify for a reverse mortgage, you must be 55 or older and own your home primary residence. You have to live there. As an aside, there are no payment mortgages for people that are younger than 55 or who need more money, and those are available through a broker like myself. And you can get, actually, depending on the location and your credit and your personal situation, you can get up to 70% of the value of the home. These are not lifetime mortgages. Sometimes they're perfect if you do them for a short amount of time and you need a little more than a reverse mortgage can offer you. If you want to know more, contact me privately or leave a comment in the comments. I'll tell you more. Now, back to reverse mortgages. This existing mortgage just needs to be smaller than the amount you qualify for the reverse mortgage under a reverse mortgage program. So again, the existing mortgage being the one you've got now. If your balance is higher than what you qualify for, you can sometimes combine a partial pay down from saving of your own, say investments. Then you don't have to cash in as many investments as you would otherwise to pay off them, but you can use it as a top up. You can ask for family's help to bridge the gap, and sometimes family can, for example, your children, they can buy a percentage of your home. So now, how much equity will you have left? Well, most Canadians in this situation still keep 40% to 60% of their equity intact after setup. Remember, you're borrowing only a portion of your home's value. The rest of the home remains yours and grows as the home appreciates, and that's yours. So here's a situation where it may not work. There are cases where a reverse mortgage just isn't the best solution. If your current mortgage is very high relative to home value, or you plan to sell the home soon, well, refinancing might make more sense. And sometimes if the penalty is very high, and let's say again you plan on selling soon, it might make more sense to get a small private second mortgage or through a mortgage investment fund, etc., to top up whatever your needs are rather than pay that penalty and rather than going through the whole process of paying everything out. Now, if you're under 55, you'll need to wait or explore other options. And those options include the ones I've just mentioned, such as getting a no payment mortgage that is similar to a reverse mortgage, but it's different. Or you can get a second mortgage on your property, and those can be set up as well as what they call prepaid. There's no payments, but it's a little different. They don't come with the lifetime guarantee. So, people often ask, well, what happens to my old bank mortgage? Well, simple. It's paid in full. It's discharged by the lawyer. And by the way, that's the only way a mortgage can be removed or added to the deed of your property is through a lawyer. They basically have a little PIN number. Think of it like the PIN number on your debit card. And those are given out to lawyers, and they're the ones that can register and deregister mortgage and other charges on the land. So the reverse mortgage lender sends payment directly to your bank. Your existing mortgage is closed. Now, tax and legal details. Let's talk about that. All funds are tax-free because it's not income, it's equity. And that's true for all mortgages. You remain on title as the owner. You still pay property taxes and insurance. That never changes. But there are no hidden fees beyond the standard closing costs. And those being, registration fees, your lawyer, the appraisal, and a small lender fee. So now here's a quick question for you. If your current mortgage disappeared tomorrow, what would you do with that freed up income? I'd love to know. Please type your answer in the comment section. I love hearing people's goals. And once the payment is gone and the pressure's gone, just type in your answer below. I love hearing the goals people have once the payment pressure is gone. So here's my advice from 25 years in mortgages. Don't rush into it. Get a personal calculation first. Talk to people. Get independent advice. And when I say independent, I mean independent from your family, from the broker. You're going to have independent legal advice mandatory from a lawyer anyways. If everything looks good on paper, you've been given a quote, that's the time to contact your lawyer. If you don't have one, 3 recommended lawyers who are specialists in real estate law in your area can be provided. You have one that's suitable for you. And talk to them. Ask them questions behind closed doors with no pressure from anybody trying to, sway you this way or that way. Make sure that they explain everything to you so you get it explained to you a second time, maybe a different way, and you understand everything. Make sure the reverse mortgage completely clears your old loan. Now, another tip is to review the long-term numbers with your family or your advisor so that everyone understands the outcome. The goal of the reverse mortgage company is to see whatever equity you have today preserved. That's why they don't lend more than a certain amount. They know the loan is going to accrue in value if you don't make payments, but they also know the full value of your home is going to go up, and the goal is just to preserve the value. Sometimes people get lucky and house values climb faster than the mortgage does, and other times it might be a down market and the interest rates are high. Well, your equity might not grow or be preserved as well. But the goal is to remove the stress and not add any surprises, and make sure that for as long as you live in your home, you are not forced to move from your home. Okay? So, just to recap, you can get a reverse mortgage if you still have one, as long as the loan is big enough to pay off the old one. You can stay in your home, get rid of the monthly payments, and usually keep plenty of equity. If you'd like to see what this would look like for your home, visit rewindmortgage.ca. Our calculator can estimate how much you could qualify and access, whether your balance qualifies on your existing mortgage. You can download our free guide, Turning Your Mortgage into Freedom, and you can contact us privately. The calculator on our website is general. For an exact quote, you want to contact the broker, because every lender has their own different underwriting criteria. Some of them will lend more than others. Others have lower penalties. Other ones have lower interest rates. So choosing the right mortgage that's suitable for you is something that you cannot do on an online calculator. Those are just for your information. No matter whose website you're on, they're never going to be accurate. My name is Peter Fabry, again with Rewind Mortgage, a division of Broker It. Thanks for watching. And remember, your home shouldn't be a weight on your shoulders in retirement. It should be the foundation of your freedom. If you like this video, please let other viewers know that you found it worth watching by clicking the like button or the subscribe button. If you'd like to watch more videos, then just stay tuned. They're coming up short. Bye for now.